Yes, I can hear you.
Okay, perfect. Boris, then we will tell Masha, please. We will run a presentation. Okay, thanks. Good day, everyone. Welcome to the International Grain Forum, Black Sea and Danube monthly grain brief. We are getting every month, and hopefully it will be very useful for you. So right now, many thanks to all of you for being with us, and thank you our outstanding speakers right now. And without further ado, Boris Serovina, Head of Business Development from Vimaxin Group, will moderate this panel. So Boris, floor is yours. Thank you very much.
Thank you, Vlado. Hello to everybody. It is a pleasure to be on such an event, and I'm looking forward to hear something outstanding today and for our participants. So big hello to Eddie. We had the pleasure to meet at the Agri-Fair in Novi Sad, and it was a real pleasure and good performance to hear something new and something which is not daily basis on the Danube and the Black Sea region. So I would like to start with Eddie presentation, and then we will continue with other participants and the speakers.
Thank you very much. Here is a quick presentation about myself and ADM today at the Black Sea and Danube monthly grain briefing. Next slide, please. Now, before we start properly, next slide. A message from my head of compliance, Mr. Philip Llewellyn. Next slide, please. Please kindly let everyone know that what you're about to present are your own personal thoughts and views and not those of ADM, Archer Daniels Midland, Wild Flavors, Probiotics, Neovia, or any other part of the ADM group. Next slide, please. Now get on with it. And so I will get on with it. This is not a technical analysis classroom, but if you'd like to know more about technical analysis, then please contact the Society of Technical Analysts, which is a not-for-profit organization based in London. It's part of the International Federation of Technical Analysts. I am the chairman of the Society of Technical Analysts, and it's very simple to look it up. It's www.technicalanalysts.com. Next slide, please. Now, I produce a number of different free daily and weekly videos, and you can find more of these on our website, which will come up shortly. These cover things from Brent, through rapeseed, through wheat, through sugar, through all sorts of things. Next slide, please. And I do annual ones as well, which cover more in depth at the beginning of each year. And those are just the main ones that I do. Next slide, please. Now, there's a lot about our company ADM, which you should know a lot about. You go to adm.com and you'll find a lot more about them there. And this gives you a brief idea about them. Next slide, please. Investor Services Companies is based in 3 areas, which is in the United States, ADM Investor Services Inc., which is the main body. In the international version, it's based in London, and it has also an operations ADM ISBV in the Netherlands for the European Union. And for the Far East, we have ADM IS Singapore. And next slide, please. And this is our history, which goes quite a lot of distance. And the most important, next slide, please, the most interesting thing is that we joined in 1998. Now, I'm mindful that time is short, and I want to get back to the real meat of what I'm talking about. So here is the final piece. Next slide, please. Yeah, as usual. Here is really the final piece, and you can, next slide, please. And the next slide. There you can see a lot of things. I'm at Commodity Trading Week. I'm at Novi Sad. I've done various articles forever. If you want to contact me, it's very simple. It's Eddie, Eddie.Tofpik, Tofpik at admisi.com. And you can see me on various other social media. My numbers there for the UK and for the European Union are below. And I produce daily, weekly, and annual technical analysis commentary on FX, commodities, and other markets. I'm also chairman, as I say, of the Society of Technical Analysts in the UK and I'm a director of the International Federation of Technical Analysts, which is the United Nations of all the different societies around the world. And I think that's the end of our presentation. So I will now go and show my first chart, and I'll start sharing. So we can finish that presentation and go back to our pictures. Thank you. That's it. That's done. Now I will start sharing my screen. And the first thing I'm going to show you is going to be, hopefully it'll come up in a second. Okay, you should be able to see Chicago wheat coming up. Can you see that, everybody?
Yes.
Okay, very simply, we have peaked in recent times, and it's a possible double top pattern, which is these two tops. The one which was in late April, I hope you can see my little arrow there, late April, and then the next one, which was over May. We have not fully broken the neckline, which I have actually used this purple line here, which is actually a downtrend and the upper bear channel for a big pattern, which I'll show very shortly. We've not properly broken. Yes, we went below it, but we've gone back above it. And this means there's one of two things could be happening in the immediate future. This is a hesitation. Okay? That means that this is one leg, this long leg here that you saw from the end of May down to roughly the beginning of June. And this could be the second leg, in which case we would be looking for a move down to, say, 545 initially, I would say, probably, then down to 525, even down to the low 505 to 510 area, possibly. The alternative is this is a diamond pattern, which is, again, another form of hesitation. But this could turn the market back up again. The problem you've got is on any rally, you've got this line here, which is at 682. This is the 50% absolute Fibonacci line. What that means is halfway from zero to the top of the market. And that is what caused the market to turn back at the end of April, beginning of May, and then again more strongly at the end of May. So this is the immediate 682 is not a line in the sand, but it's a thick band of congestion that will slow the market down and make it halt. The alternative is that we go down quite a bit. Now, the next big area of support is this area we saw back in December and January, which is around the 520 to 500 area. We haven't decided yet, but I would note one thing. This line here is the long moving average. That's running through today at 608 3/4, I think, 3/8. Yeah, 3/8. That's turned the market up this week. So we have support there at that level, and we have resistance, even though it's been broken, at this, which is the medium moving average, which is the low moving is 571. This one up here is trading at 608. Let's say it's 608. So 571 to 608 is the immediate. Now, I'm going to show you my long-term chart. This is a chart. So this is really long-term patterns and what's going to happen. It's a lot simpler. That's cool. Let me go over 2 weeks. Now, if I was to switch over, you'll see a red line here. This red line here. This is the neckline of a very big head and shoulders pattern. It runs through below the market today at 567 3/8. If we were to look on the longer term chart, you'll see what that pattern is. It's a top of a bear channel. Now we broke above it, but we've not stabilized above it. And you can see easily there, the 50% absolute Fibonacci line stopped the market. We now are resting on this line. It would not surprise me for the market to move along this line. And this is a long-term pattern. So it could easily move down this line for a couple of years. And that would be a gradual erosion of the price of wheat. Okay, I'm open to any questions if anybody wants. So I'm going to move over to comments and see if there's any. I know it's blurry. If you want a more clear picture, I'll happily send you the link to my videos where I show these exactly, or I can even send you the chart. I'm happy to do that. Just drop me an email that say, please, can I have a chart? And I will send it to you. But the key picture to understand is this. Longer term, the pressure is on the downside still. In the immediate future, we're caught between two areas of support and resistance. And what's happening at the moment is the market is trying to decide how far down it wants to go. It hasn't gone, the top side is limited by the absolute Fibonacci line, but the downside, the market hasn't decided. And it's a case of indecision at the moment. There's three ways the market can go: up, down, sideways. And it's sideways at the moment, thinking about going down. Okay, so I'm now going to move on to, let's see what this says. Right, I can't answer that one about Romania and the Black Sea. I'll leave somebody else to do that. I will now go over to corn. And it's not a dissimilar picture. Are you still seeing my pictures or not? Right, let's go and share this. But it suddenly stopped sharing, and I just want to make sure about that. All right, are you seeing this now?
Yes. Mm-hmm.
Excellent. This is Chicago corn, and it's not a dissimilar picture, but we have one major thing, which is this big long uptrend here. This is holding the market. This is what turned the market up this week. And this stretches from May 2020, and it's a good support. Today it runs through at 405.5. 405.5, and this is second month continuous. 405.5 is the support for this market. The top side, well, it's getting interesting because the highs are getting lower. So there's pressure still to push down on this uptrend. Will it give way? I'm not sure. I think you're going to see this range narrow from between 425 to, let's say, whatever that is going to be next week, which is going to be something like 405. So you're going to have a 20-cent range, and it will get narrower and narrower, and then it will break one way or another, I think. But we won't know just yet. Now, looking at the longer-term chart on this again, I'm going to move over to Chicago corn longer term. Bear me just 1 second. You can see it's testing this support line, and it's been doing it for a while. And this is stretching it from some while. That's the 2020 today uptrend. Yeah, it's been below it, but it's not really stabilized below it. So I think gradually on the longer term picture, it's still positive on the upside, gradually, very, very slowly. But in the immediate pressure is on the downside for Chicago corn. Happy to pass on my charts. Anybody wants them, it's absolutely free. Under the FCA regulator in the UK, I'm allowed to do that. I'm now going to give you Paris wheat because I think that's quite an interesting one to look at. Let me have a look. And again, we have hesitation. We have this whole area of hesitation, which is from early June to date. It looks clearer that this could be a halfway hesitation, in which case one leg is down to, say, from about 208 up to 228, and the second leg will be from 216 down to 196, some 198, somewhere around this sort of area. It hasn't broken on the downside. The key support at the moment is this mauve medium moving average that's running at 209.5 today. The minimum, and it's not the immediate, but the minimum you'd need is 2 clear closes on this, one after another, to see a beginning of a pressure on a downside. And ideally, you want to see below this level, which is 204. Then you could see a move down to this sort of area here, around about 196. The only thing that's in the way is the long moving average, which is 203/4. That's dubious because it held it a little bit back here in February, so I'm not too sure how good a support it will be. But the pressure is on the downside, and this is a hesitation. The market is just trying to figure out which way it wants to go. It tried it on the downside, didn't like it. Tried it on the upside, didn't like it, and we haven't made up its mind yet. On the longer term chart for Chicago corn, hold on a second, I'll get it to you. Where are we? Sorry, Paris wheat, some milling wheat, my apologies. Here, you can see exactly the same thing. We have this long-term uptrend. It's running from 2010. So this is a 16-year-old uptrend, and that's running through today at 196.80. 196 is a key level in this market. Not just today, not just tomorrow, not just this year, but in the longer term. So 196, 197 is a key level at the moment. And that's the situation on that. So we have hesitation in Chicago wheat, hesitation in Paris wheat, hesitation in corn. Let's look at something a little bit clearer, and that is, you're going to love this chart. I use this chart every day because I can see what's going on, but it's an absolute mess. This is my Brent crude oil chart. Let me share it again because I know it's just stopped sharing. So let's go do that again. Okay. Has it come through?
Yes.
Look at the mess my chart is. What an absolute appalling mess that is. It's so bad, to show people, I've actually drawn a second chart to make it a little bit easier because it just got too complicated. That's the simpler version. Hold on a second. It's gone off sharing again. This will be the last chart to look at, actually. So there we go. That's a simpler version of what Brent crude oil looks like. And the pattern here is very clear. There is a triple top pattern here, which was over March and April, which means it's a topping action. The market came down, it tried once more again, and you could regard this as a big pattern, a double top Eve and Adam pattern. Additionally, these two necklines, which is from July, November 23 for a head and shoulders top, and September, November 24 for a head and shoulders top. They were the band the market was trading within. Once it broke out of that band, I could then give you an idea how far it could move. It formed over May this bright green pattern, which is called a bearish shift pitchfork. It's actually a modified bearish shift pitchfork. And it is brilliant at showing the angle of attack of the market. This market has been heading lower since the end of May in this side. Yes, it's gone above it, but it came back within it. It's held on to the bottom side of the pattern. Today, that pattern is, where are we? Today's the 2nd. So today is, right, the top side is at 75.76. This is Brent crude oil. And the bottom side is at 63.55. Quite a wide range, but then we've had big moves. This whole pattern here, this topping pattern, has given two targets. The primary target is at 67.99. We're not very far from that. And I put that in over a week ago, 2 weeks ago, when we broke down through this thing here. The secondary, harder to reach target. So this is the much harder. Many times it doesn't manage it. It's down at 53. I have my doubts about it getting down to 53, but it wouldn't surprise me if it got down to 67.99 or 68, let's call it. We're trading at 70.74, so we're talking about $2 3/4 drop in the price of Brent crude oil down to those levels to reach it. It's filled in a recent gap, which was made at the end of February. It's a changeover gap, but it's still a gap. And we are heading nicely. And this looks a very, very comfortable pattern that we've topped out, 3 tops, second top, and then we're now heading down. And that concludes my presentation. So I'm open to questions. Is there anything that anybody would like to ask me? Right. Thank you very much. Let me have a quick look at this. Antonio Jose Brazida. So this is technical analysis. The wheat is an agro commodity where the price deals with the pressure from prices of fertilizer. No, you're wrong. Sorry, you're wrong. You're absolutely wrong. All markets follow technical analysis. It's older than any of those other fundamental things, the F word as I call them. The technical analysis of grain markets, the first technical analysis of grain markets was done by the guy who wrote the first book on trading, which was Masha in 1750. He wrote a book called The Fountain of Gold, the Three-Monkey Record of Money, and he was a rice trader in Japan. And he developed candlesticks, and candlesticks we still use. All those notations are candlestick notations, and I still use those. So that is something which is almost 300 years old, and we still use it, and that is technical analysis. So yes, it works. Thank you, Ganesh. I'm very kind of you. Seasonality. I love seasonality. I would be looking at seasonality more on gas prices rather than crude oil. Demand for crude oil actually goes up during the summer months because it's the driving season. And we're coming sort of like midway through the summer months. So the crude oil has been produced that's making the commodity, the gasoline. What's happening next is you're coming into the end of the gasoline season and moving to heating oil, which is a lower grade of product. And gas prices are more interesting. At the moment, I think that will be the one to watch. I mean, I wrote a whole piece. We spoke about this before we went online, that I wrote a whole piece about the impact of gas prices and gas shortages on the urea and on sulfuric acid from the Middle East. So, any other questions from anybody else? Okay, so I'll stop sharing and hand over back to you, Vlado, if that's okay.
Okay, thank you. Boris is our moderator. Boris, floor is yours.
Yeah, thank you.
Boris, my apologies.
Yeah, no worries. Thank you very much, Eddie, for very well explained and the brief details and analysis. The next speaker is Masha. So welcome, Masha, on today's event, and please let us know a bit more about the current crop condition and forecast in the region you are involved. Thank you.
Thank you, Boris. Okay. You already have my screen here. So, well, first I want to say that I would totally agree with Eddie that technical analysis is the key. Even we have some fundamentals. Well, from what we saw on our side, it's always the technical which is driving. Of course, there are some things happen like war, but war was the only thing that was really moving the market. All the rest is more like trying to find the reasons why. But with one, from my side, I would say, exception, the Black Sea. The Black Sea market is not really following what's done in Chicago, etc. In our region, what we see is that we can follow if there is big increase in price. That's something that trade is like most of the time they are happy to follow. But when there is a drop, it's not always mean a drop in the Black Sea, because we have our market is completely physical. In Ukraine and Russia, trade is not really, well, okay, they do hedge, but they do hedge against Euronext most of the time, and not everybody is doing hedge. So it's still a very physical market, which is driven by more by the fundamentals, but I would say more like just the supply and demand on our side, or some specifically linked to the region things that happens. Can you change the slide, please? So before I start more on on my presentation, for those of you who do not know what is Fastmarkets, Fastmarket is a PRA agency, which means price reporting agency. So our key focus is on the prices and mostly the physical market prices. We don't do the technical analysis. That's leave it for somebody who is much more experienced than us. We do follow not just the agriculture, but we also follow the forest products, the metals and mining. Our core division here in agriculture is trying to catch all the markets. So it's just grains, oilseeds, veg oils, meals, animal fats, crude oil. Oh, sorry, not crude oil, veg oil. I mean sunflower oil, and some very specific things like leather or hides. Not in that market, thanks God. So my key area is the grain market, and especially wheat, barley, and corn, and specifically for the Black Sea region. I do follow most of the time the European market as well, the Bulgaria, Romania, which is also part of the Black Sea region, and Asia, Australia, because we are very linked in the wheat market. We are big competitors. So that's my key areas. And today I will be focused just on Ukraine and Russia, and mostly on the new crop, which is for now wheat and barley. The next slide, please. I just also want to say that we as a Fastmarkets, we don't do the forecast. Like there are many other agencies who doing it. And what we do on our side, because we are reporting agency, right? Not an analytical one or forecasting one. We just talking to the trade sources, the analyst in a trading company, the analyst, just analytical companies in Ukraine and Russia or anywhere else, and trying to see what's the average idea in the market for some specific forecast for wheat or barley, etc. And if you're talking about the Black Sea region, the next crop is looking like a decent one for wheat and barley as well. For Ukraine, the estimations are in a range between 23, 25 or 24 million tons. Because we, firstly, the estimations were lower. The most pessimistic one was 22.5, if I'm not mistaken. But in last 2 months, we had pretty good weather, wet weather in most of the regions. Yes, there are some regions which were less blessed with rain in the western Ukraine, but overall the conditions are fine, and the heat which is just coming now into Ukraine is not really expected from what we hear to impact the wheat yields, but it still could impact the wheat quality. So that's still something that we have to see, because the harvest just started 2 weeks ago, and for now we have the results only from the southern regions. And in the southern regions, they are pretty good for now. Same with barley. And I think for barley, the market is feeling that something is happening and there is a good crop. It's just not the good crop in the Black Sea region. It's also a good crop in Europe, and also good crop in Turkey, because Turkey is one of our buyers, usual buyers. And for this year, they are not expected to be buying anything. Actually, they have a surplus for export. But from what we hear from the Turkish sources is that most probably they would not be able to export, just because the prices in Turkey are much higher than the prices we see right now on FOB basis in Russia, Ukraine, Romania, Germany, whatever. So it's just adding some pressure, but they are not really going to be in the market. It seems like that for now, at least. In Russia, according to the local analyst, it's not my forecast, it's just a range. The crop is going to be for barley at 18, 19 million tons. This is a little bit lower than last year, but in general, it's just a pretty good number anyway. And for wheat, the current estimation is in a range from 89, 91 million tons. And As always, I do this remark, that's without the occupied regions of Ukraine. With the occupied regions of Ukraine, there would be few more million tons, which would be available for some countries, which don't hesitate to take this grain from the occupied regions. I think this year, actually, there would be some problem with that because, well, I would be talking about that on the next slides, but you know, there is a fuel deficit right now in Russia. Okay, let's do like that. So yeah, there is a fuel crisis in Russia right now. They are even starting to import gasoline from India. But from what we hear right now from the market sources, they don't really expect this to have a big impact because what they can import for now, that there is a vessel of 60 tons coming, which is very small amount given what they are using on a daily basis. Of course, Russia used to be an exporter, so probably they still have some stocks and they can repair the plants and keep producing this to the domestic market, but it feels like it's going to take some time and nobody knows what is going to happen during that time. So even for now, we don't really see any big impact from that. That's really and definitely something to watch how it's going to impact because farmers, what we hear, farmers were already covered for their fuel because Russia has been banning the export of diesel for some companies and for gasoline as well for some period already. So there was time for them to build the stocks, but stocks are not unlimited, right? So at some point they also have to go into the market and buy again. So that's definitely something to watch again. Sorry, I'm jumping from one topic to another topic. So again, on the production side, last year was a decent crop in Russia and Ukraine for wheat. This year we are going to see a little bit higher in Ukraine and probably higher in Russia. Not super high, but like just 1-2 million tons above it. And also on this slide, you can see the exports and the exports for the season that just ended yesterday. So you can see that the Ukrainian wheat export pace was the slowest in the last 5 years. There are lots of reasons behind that. We have been not really competitive for some long periods. We also had a really big problems during December, February time because of the attacks on the railway system and the terminals, which was slowing down the exports. And you can see it clear on this chart as well. We ended this season with an export of, if I'm not mistaken, 13.5 million tons. Oh, no, sorry, 14 million tons. So it means that at least 2.5 million tons from the expected export there on the market. And that's without the other stocks. So probably a few more million tons are also available. And we have a big crop coming and the harvest has already started. So the supply is big on the Ukrainian side. It's the same situation in Russia because you can see on this chart that the export has been improving, especially in the last few months. But they are still not at their record, not at their highest export pace, and there is still stocks that's available before this new crop start to come to the market more actively. The next slide, please. And as we are price reporting agency, this is the price that we have, the price history that we have for the Black Sea region for wheat and barley in Russia and Ukraine. And the interesting thing that we have been seeing this year especially is that the new crop prices for barley and for wheat started to appear back in April. But for very long period, until the end of May, they were almost at the same level as the old crop. So there was no usual inverse between old crop and the new crop, which is something you would expect in the Black Sea. That's something that was almost always happening. And it was kind of like on the sell side, the sellers were just saying like, we don't really see a reason why we should be selling now because there is no inverse. So we are not in a hurry to sell because the price is just the same. On the buyer side, they were expecting the prices would be lower because the crop is good in the Black Sea region. Okay, there are some problems. There were some problems in Australia. Right now it's fine in Australia because they are getting too wet right now after getting too dry just a month ago. There were some problems in US, but it seems it's not that bad as it was expected. So, and the Black Sea was really looking quite heavy. So they were also not really stepping and not really buying forward. Another reason why the sellers were not really making a lot of their forward contracts in Ukraine and Russia was also their last year experience. Because last year, and you can see this on the chart as well, right here in July last year, the prices were dropping as well because like normal harvest pressure and all this kind of stuff. But then the harvest was delayed and the guys who have signed the contracts for July execution or early August execution, they were caught and they were really struggling to cover these amounts from the domestic market. And suddenly there was a shortage, even there was no shortage on the paper. So the prices were again pushed up, and you can see that after reaching the bottom, the price started to go up again last year. So this year, people learning from their own experience and their own losses, sellers were not really selling much to forward and were waiting. But then it seems in that game of watching who would be making this step first, the buyers winning, at least it's like that for now. And since May 28, around that time, the price started to drop. Of course, it's a harvest pressure as well because, we were getting closer and closer to the harvest. So you have to do something, you have to sell. Secondly, it was more obvious that probably there would be, okay, for now at least, there won't be that big shortages. And and the buyers were also starting to, pick up some cargoes, especially in Asia. There were some trades done for Ukrainian wheat. Once the price get down a little bit from the highest levels. But then, once buyers saw that there is a decline coming, they were all went off the market. And right now, we still see that there are more sellers than the buyers, and the price is dropping almost every day. And it seems buyers just watching what will be the bottom. And you can see on the chart that we are already quite close to the levels, to the lowest levels since that were seen last year. Jose was saying, what about the fertilizers and the diesel prices, etc.? It's a really tricky question because, we also heard from the market that yes, the costs are higher than last year, so probably that would be some factor that would be just keeping the farmers from getting too much down on the prices. But I think it's, yes, there is some limit, definitely, but sometimes market is just stronger than that. For now, from what we see, we are not yet reaching that levels where there is a loss for the farmer. I'm not really too much into farmer side of the thing, so if there is somebody listening, please correct me after on that side. But from what we see, the price is going down, and we are already closer to the bottoms that we have seen last year. So probably somewhere around there could be a bottom. Let's see. I don't know really. That's not really something I can forecast. I just can show what is happening right now, and you can make your decision based on that. And I should also add that for now, Ukrainian and Russian wheats looking the cheapest in the region and the cheapest in the whole world, actually. And I do want to have this note because I know some Ukrainians listening. For now, Ukrainian 11.5 is almost the same price as Russian 12.5. And obviously, for some of the buyers, like Egypt, for example, if they would be considering which region they're going to take, of course, they would take Russian 12.5 because it's better quality at the same price. So on our side, we really have, it seems we have to drop a little bit more to have more demand. Of course, there are some countries which would prefer our 11.5 wheat over anything else, but that's something to consider because we always follow each other and we always in this market together, even we don't really like it on the Ukrainian side. And on the barley side, the prices were keeping on a high level for a very long period because last year there was a deficit kind of. And when the price was 240 FOB, Ukraine or Russia, sellers were not really selling. And now we are dropping to, I don't know, Russian is offered 202 FOB, Ukrainian is 206, at least from yesterday. I don't know what's the price today, but probably it's the same. So you see there is a huge drop because, it seems we are going to have a really good supply and not just in the Black Sea region. Next slide, please. Just a few words about the freight. On the freight side, we also see that the Black Sea is separate from the global picture, while big vessels like Panamaxes or Kamsarmaxes, they usually follow what's happening in the global market. They follow the BDA index or Brent oil going up or down because, there are many factors behind that, but basically big amounts of cargoes, not just grains, are shipped in this kind of vessels in Pacific or Atlantic region. So if there is a big demand, they are going there because prices paid there are better than here. The second reason, I guess, in the Black Sea region is also that we have risk. And from what I know, not every company is really paying the insurance. Don't really want to say that, but that's the reality. And most of the operators in our regions are not the European big companies, are just other companies, Arabian companies, Chinese companies, and the vessels are not really super new. So it's making this market absolutely separate from the global picture. And you can see that, for example, the big vessel rate was keeping up because it's for Panamax from Ukraine to Indonesia, Vietnam, was keeping up, but at the same time, you see that the handies were just going down. And in the Black Sea region, what is driving the freight rates is simply supply demand and anything related to logistics. Like, for example, in Ukraine, if there is attacks on the terminals or there is something with the logistic inside Ukraine, usually it's also related to the attacks and the power shortages. In Russia, that could be also some limitations in Kerch Strait for passenger vessels or anything related to the terminals, because there are also attacks on the terminals, mostly on the, not mostly, but most of them are focused on the oil, not the grains, and they're separate. So it's not really affecting, but there are some times when it also can affect the flow. And just basically the supply demand, and for the last few months, that wasn't great. There was more fleet open rather than cargo open in the region. What we see right now is that for the spot shipments like July, the levels are still low, but for August shipments, owners are already trying to push higher the rates in the Black Sea region because they're expecting more cargoes available in the region. So trying to monetize that expectation, but let's see, because trade wasn't really good. But anyway, it's expected to be more active once the new crops start to come to the terminals and ports. Next slide, please. Oh, yeah, that's it. So basically, what I want to say about the Black Sea market, we have quite a good crop coming in the region. And while for the long period the price was stable, in the last months we see a drop, and this drop is still continue, it seems. Buyers still watching. So I think at some point either the market is stabilized and buyers start to come and buy more. But for now, I don't yet see it because our key buyers, they are covered. Like, I mean, Egypt is covered until August. Probably they still gonna come soon to buy more. For Asia market, I also see that they are still looking for some cheaper prices. So either there would be a period of some stabilizing, or something gonna happen and they start to buy. I don't know, really. That's not something I can predict, but we are already close to the bottom level if we consider the bottom level last year lowest prices. Another thing is the feed wheat in Ukraine. Given that the yields expected to be really good in Ukraine generally, there is an expectation that there would be again quite good amount of the feed wheat. But what we saw last year is that even on paper there was a lot of feed wheat. It wasn't really available on the market, on the export market, because trade was just mixing it with 11.5 or other grades or other qualities to make cargoes. And so I don't really, for now we do see that there is some feed wheat and it's quite cheap, but if it's going to change, it can change once we have a harvest and once we know what is their share in the market between feed wheat and milling wheat, as we saw last year, because last year we also saw some feed wheat offers and then suddenly they're gone. So just keep that in mind. For now it seems it was the buyer who was winning in this situation. So for now they are just trying to catch the bottom, it seems. There are some things to watch. I think it's more on the logistics side for both countries, because in Ukraine it's a rail logistic, especially if there would be heat. So there could be some power shortages, there could be some attacks again, and the terminals were really under heavy attacks in the last months. Well, actually they're under heavy attacks for the last year already. So there is an expectation that some part of this capacity is not really available yet until they can repair this. So there are some things to watch in Ukraine. And also on the track side of the logistic, we really see that there is a labor shortage in Ukraine because of the conscription and the war ongoing. So the truck prices are not the cheapest, and it's not a regulated market. So once there is big demand, the prices would go up. In Russia, I think the fuel thing is something to watch as well, because there is no prediction what is going to happen next. And farmers have stocks for their harvest campaign, but do the trade have stocks to move these grains to the ports, etc.? And I think in Russia, another key thing is the FX rate. But as Eddie showed us their Brent oil chart, it seems it's not going to firm. Hope so. But in Russia, what I saw is that the FX rate was really supported by the Brent oil. And once the Brent started to go down, the FX also started to go down. So it did create a better situation for Russian exporters, because for quite a long period they were struggling to compete, because everything in Russia in domestic market is in rubles. So logistic is in rubles, transshipment costs in rubles, the domestic price is in rubles. So when ruble is firm, it's really bad for the export. And now it's declining. So even their expected increased cost for their logistic, the fall in ruble most probably is going to offset this. But let's watch it. I cannot really predict what is going to happen. Yeah, I think that's it. And I'm happy to answer any questions if there are any.
Thank you, Masha, very much. There are some questions also from our participant, and one of them saying, "For where do you see the demand for India for the wheat? What do you think about it?"
Honestly saying, I haven't talked about their demand for wheat. It seems they were, well, at least the last time I was talking with Indians regarding their wheat, they were quite covered with that. So yeah, I don't really think they are going to import anything. But Alex, I would check that and come back to you. Yeah, there is a question from Bogdan. Thank
Yes,
you.
there is a question also about the expectation of the larger feed wheat. Basis on that,
Yeah.
that is grounded.
Yeah, so that's exactly what I say. Like for now, yeah, well, why I do expect, because that's what we heard from the market. So because of higher production and higher yields, usually people do expect more of the feed wheat available. But again, as I said, the quality is something that still can change. So there could be that, like on paper, there would be feed wheat, or there would be feed wheat, but not according to all the specifications. Sorry, I'm not a trader, so maybe in some way my comments are not as the market does, or the traders do speak with each other. But yeah, what I was going to say. Yeah, so basically on a paper, it seems there would be more of a feed wheat, but that's something that we still have to check later once their harvest is in a full swing and we see what is really coming from the fields, because for now we only have the results from the southern regions, but they are good. Yeah. What are the VAR premiums for logistic and the Black Sea currently? I think it's the VAR risk premium for the bulk. What I heard, the latest was 0.4%, but it's only if you do the insurance. And in the Black Sea, most of their freight guys are not doing the insurance. The insurance is done mostly by the ABCD companies or some really large companies in Ukraine. But if you're talking about the middle companies or smaller companies, most of the time they don't do this. So there is no VAR premium. It's just supply and demand driving market. It's just that because of this risk, there are still some companies who are not really coming to the region, because for them, I think it's not just the risk. It's also that there is this market when there are lots of Arabian Chinese owners who are operating in the market. And for big vessel owners, for big companies, operators, it's really hard to compete with them, because they have to follow all these rules. They have to insure the cargoes, the vessel. They have to pay these premiums, while others don't. And it's really hard to compete. Yeah, I think, yeah, there is one more question from Bogdan regarding the farmers selling. Oh, that's something I cannot really answer right now, because I do see that the bids on the trade side is coming down, and seems farmers are selling, but I cannot really say right now if they are active in that. So that's probably something I would ask Bogdan, because he's more related to that market. So Bogdan, if you want to comment, feel free to do this.
I have a question my side before we go forward with Peter. With all this supply demand, Ukrainian and Russia, we shall also consider it I call it personally west part of the Black Sea, where the Romania, Bulgaria are, and Hungary and Serbia and Slovakia as a Danube flow. So we have a tremendous crop in Romania and also in Bulgaria. We shall also consider it those two countries, especially on the wheat side, where the supply is increasing every year. Then we have a fixed rate, which is currently also started to be more volatile compared to past few months. And significantly, we have a freight spread for the seagoing vessel between CVB and the POC. And this is not a formula. It also depends on the owners, but also depends on the daily basis, on the current situation. So all this together will really bring a big matrix on the wheat, especially on the wheat. And I would like to add something new between the cargo swap, especially corn and barley. So I do think that barley will not go further down, especially because we are in the middle of the weather market, and we are in the middle of the corn, which is very substantial in the region. As you know, Ukraine, Romania, Serbia, Hungary are big exporters traditionally. And if we don't see the favorable weather on the corn side again, on the west part of the Black Sea, as I said, I do think that demand for the barley and the feed wheat will go up, and simply the destination will start again thinking to swap the commodity about it. So what do you think about it?
Well, yes, on the wheat side and the barley side, Romania, Bulgaria also looking good. I didn't add it because it's another topic, but generally, yeah, the whole Black Sea is looking really good for the wheat market and for the barley market. And yes, there is a spread between POC, which is Ukrainian ports, and Constanța Varna-Burgas ports. It depends on the destinations, because for some destinations, at some point, I see there could be a spread up to $6-7, but on some other destinations, there is just a spread of $2-3. So it depends on the market, it seems, depends on what's the flow. For now, the barley is the cheapest. So for now, barley is probably the preferred feed commodity. But for the corn, I think, at least from what we hear right now, firstly, the estimations for Ukraine were quite good for corn. But the heat, which is right now in our region, is most probably is going to decline this. So for now, it's not really clear what would be the impact, but most probably the crop would be the same size as it was last year. So around, 31 or 31 point something million tons in Ukraine. While for Romania, Bulgaria, what I hear on my side is that, for you guys in the southern regions of Bulgaria and Romania, the weather has been really bad for the last few years. And it seems the later crops are being affected. And from what I was talking with the guys who are operating in CVB region, is that it's not really expected that there would be big amount of corn available for export. And that was a conversation like a month ago, before this heat wave. So probably Romania and Bulgaria won't be really competing. They would be just focused on their domestic market. And what I heard as well on my side is that in Romania, Bulgaria, there also won't be really much of the feed wheat available for export, because again, there would be demand for that inside the market because of the corn, not clear picture what's happening. And it would be, for now, feed wheat is much cheaper than the corn on FOB basis. Even the corn is dropping for the last months as well. So yeah, I do think there would be some switches, but sorry. I'm just jumping.
Thank you very much. There is a comment from Attila Kutash here. Hungary is not a corn exporter anymore. Yes, this is true. I was saying about the wheat, because we are we were talking about the wheat from Ukraine and then Russia, which is the east part of the Black Sea and the supply side. And I was talking about the Romania, Bulgaria, and the Hungary, especially on the higher protein milling wheat. So this one is also very considerable, as we call it, the Danube flow. On the corn, yes, Hungary is not anymore the exporter comparing to 10 years ago when the export, I mean, I remember the time because before Vmexim I was working in Idera and Kofko time, and I remember Hungary and Serbia were quite significant corn exporters via Constanța. Masha, thank you very much for your well-explained presentation. Peter, please, the floor is yours. Finally.
Thank you very much. Do you hear me? Hello? Do you hear me?
Yes, we do hear you, but with some delays and problem in the voice.
Yeah, okay.
Not really. Could you please try to switch off and switch on again the microphone?
I do not have another microphone, so I don't know what the problem is.
It looks better now.
Yes.
It's better. Okay. So on my first chart, you see the Euro and Hungarian forint chart. And I show this because right now there is no market on the Hungarian market. So producers are not selling at all. And one of the reasons is that the Hungarian forint became very strong after the elections in Hungary. But you see a free fall in the chart and in the last quarter of the chart. That was the date of the elections. It was April 12th of April. And that's from the 13th of April, the Hungarian forint became stronger and stronger every time. And the producers were not happy with the prices, even when they got 380, 390 forints per euro. So why would they sell? They did not sell at that time. Why would they sell when the euro is 355? You see, so stronger Hungarian forint means less temptation to sell on the international market. The other reason why the Hungarian producers are not very active these days, this is the weather conditions. If we go to the next slide, I showed two maps. One is the precipitation, and the other is the temperature. Now, in case of the precipitation, what you can see there is that the deviation of the precipitation of the last 90 days compared to the long-term average. And you can see that it is full of minus figures, -5, -50, -60, -70. So it means that comparing to the long-term average, we lack precipitation. Also, if you look at the temperature, then you can see the deviation of the last 30 days average compared to the long-term average, and you can see that we are +4, +3 degrees centigrade. So we had a much warmer period in June, not mentioning that in the last 1 week, we had temperatures between 30 and 41, 42 degrees centigrade, which kills a lot of things. Now, if we go to the next slide, you can see that this is the map which shows the level of drought in Hungary. So, in fact, all the areas in Hungary are affected by drought. And most of it is with medium, strong, and extraordinary drought. And I try to collect some crop figures, thinking on giving you some ideas about the Hungarian crop, but nobody dared to say anything because the situation is very bad in Hungary for the time being. We expected a bad crop in barley, but fortunately it looks better than expected. But we don't know what will happen with wheat, for instance. We don't know what will happen with rapeseed. And the big question mark is still on the so-called spring crops, the sunseed and maize. although the Hungarian producers were careful because in the last season they were focusing much more on the winter crops, so they increased the planted area of wheat, winter barley, and rapeseed, and they reduced the areas for spring barley, soya, and corn, in order to avoid the effects of the drought. It seems that they will not escape from this. There was one exception in the spring crops. This was sunseed, where they increased the area because they said that sunseed is much more drought resistant. But as we can see right now, or as we hear it on the fields, even the sunseed is suffering right now. So what we can say is that in wheat we are going to have less than expected. A crop less than expected. So we expected 5.2 million tons at let's say until 2 weeks ago. Some say now that we are going to have 4.6 million tons. I don't know whether it is true or not. Nobody knows at the moment. But it means that we still have export potential of wheat. Barley, we had still an export potential because it will be better than expected. In oilseeds, we expect export potential, but where we do not expect any export potential, rather we expect import. This is maize. Maize is going to be below 3.3 million metric tons, which is below the local consumption. And I think that we have to be prepared, or the producers have to be prepared for drought in the next few years, because what we see right now in Hungary, and I think it is going to be general for the whole Europe, there will be problem due to the climate change, and because the climate change is already here. So in the last 5 years, 6 years, we had 3, maybe 4 years with drought, which never happened before in Hungary. So I think we have to be prepared for that. Producers have to change their, let's say, technology. They have the production skills as well, and they have to change the plants which they are going to produce, because Hungary is not going to be any more exporter of corn, and it seems that the export potentials for all other grains and oilseeds are reducing, unfortunately. So that's it, because I see that the time is running. So if you have questions, I'm happy to answer.
I have a question for the Peter. Where do you see the forecast for the rest of the July and the August for the Hungary?
Right.
Sorry, it's we cannot hear you. Connection is bad. Breaking up.
So it's going to be most probably dry and warm, unfortunately.
I'm
Hello?
sorry, I couldn't hear. Now it's better. Could you repeat, please?
Yeah, it is going to be warm and dry. So we do not think that there will be changes in weather.
Yes, okay. Same as the region. Currently, it's hot and dry.
Yes.
I simply see it like last year scenario with a very hot July, lack of the rainfall, and same for the August. Which again bringing up in the region a new problem, because export via Danube, especially from the Hungary and the Serbia, will be slower down, and the draft limits are very low. Peter knows that the bottleneck in Hungary is Dunafeldvar, above which is 160, 170 safe draft, which is very low. So all these weather forecast and Danube levels will affect the export speed, and also affecting the supplies, because even the prices are okay to the farmers and exporters, we cannot export it from Serbia and Hungary at full speed because of the river transport, which is 30-40% less versus the normal draft. Is there any more questions for the Peter? Okay, I guess there is no any more questions, and I would like to add to a couple of phrases and to conclude this event. First of all, thanks to all participants and the speakers, Eddie, Masha, and Peter, on your time and your energy, and thank you a lot for your valuable inputs. Also, there were very good comments and the questions, which means that this is well followed up, and we can also bring it up some valuable information for the coming season. I would like to add that it will be really good to follow up, because we're in the middle of the weather market, not only for the region, but for the entire world, where there are so many external factors which we cannot predict. And it will be really good to have a more frequent such events like this Black Sea and the Danube event to follow up on the supply side. On the demand side, it will be very interesting to predict what will happen in next coming month, and how destination will think about switching the crop, the cargos, whatsoever. About the weather, we need to follow up very close, because this is the most valuable input and the factor which can affect for next coming months entire market. Not only the Black Sea region, but also the world, because we see the drought in Europe, we see the drought in Russia and Ukraine, as Masha said, and for the United States and for the South, next time maybe we can discuss it more. And can be very good to make a link between agreement between Mercosur and Europe, and maybe we can think about it for the next event, how this will affect the trades from South America to Europe and to MENA. From my side, that's it. I would not bother you anymore. Thank you very much for your time again and for your energy. And it will be very good to see you again on another or similar topic.
Thank you.
Okay,
Thank you very much.
See you next month. Okay, many thanks.
Big thanks. Thank you very much indeed.
Thank you.
Bye,
Bye-bye.
Bye.